great to have you here. We're in the Vineyard, where I guess they say magical things happen. I think the other part of being in the Vineyard is, having informative and impactful conversations around relevant topics that are happening, in the business space and life, everything of the sort. And I think, listen, you've been successful at starting your own CPA firm. There was a new tax legislation bill, the One Big Beautiful Bill, that came out on July 4th. I think we've had some time to kind of digest it and understand how that impacts real estate investors, whether they're small, whether they're large, wherever you fit kind of in that spectrum of investing in real estate. There's actually things in there that are beneficial, and I think so. The point, the precipice of the conversation is to make sure that we communicate to everyone what the importance of focusing on the bill is, what they can take away from it, and how they can leverage their portfolio in any capacity. Because I think there's things in there where we can win.
Absolutely,
so, yeah. So maybe quick 10-15 seconds about you, your firm, and we can kind of dive into a few questions.
Sure, yeah, thank you, Brian, I appreciate it. So my name's Andrew Coombs. I'm the owner of Coombs CPA. It's an accounting firm that does business taxes, individual taxes, 409A valuations for portfolio companies owned by VCs and PEs, CFO outsource for organizations, R&D credit consultation. So we do a whole gamut of accounting, and we're located in the New York area, specifically Newark, New Jersey.
Yeah, great. So we'll dive into it. This is a special conversation of Why Wednesdays, the who, what, when, where, and why of real estate. So we're gonna jump into the who, what, when, where, and why of the One Big Beautiful Bill. So I guess the first question we'll just kind of go into is for investors who haven't followed the One Big Beautiful Bill, what's the most important thing that they should understand and tap into before they fully immerse themselves into it?
Yeah, no, that's a great question, Brian. I mean, there's literally so much to it. The biggest thing is the bonus depreciation, the Section 179, particularly with improvements, right? So if you have a real estate asset and you put, a roof, an HVAC system, or, just other improvements, typically what traditionally happened was you would capitalize the amount and you would depreciate it over the life of the property, which is typically 27 and a half years. For residential, for commercial, it's about 30 years. Now with this bill, you're able to essentially write off those improvements essentially with a bonus depreciation in the first year. This is particularly beneficial because, if you have an asset with, heavy amounts of rental income, right? This basically is a cushion to help offset, those amounts, okay?
Yeah.
I will tell you this, and this is important for everybody to know, when it comes to taxes, depreciation is a temporary expense. It has to be added back once it's sold.
That's very important part.
Right.
Very important. People miss that.
Right, correct. And what's also very important to know is that, depending on the rental income and the life of where the property is at, you might want to capitalize and spread it out instead of using it all in the first year.
Right.
So that's where tax planning comes to play. But yeah, basically high level, that's like probably one of the most beneficial.
And that selling component, right? Then it kind of comes into that 1031 exchange.
Exactly.
Where if you do get aggressive and you're like, hey, I'll figure that in on the back end.
Right.
Then you've kind of have your strategy long term in place that you're not worried about adding it back on the back end because you're going to kind of transition to another property or you take that risk.
Exactly.
But no, that's important.
Yeah.
And so I think we touched on, so the next I would say, what's a return? How does the return of the 100% depreciation bonus in the Section 179 change the math? And I think, yeah.
It could be incredibly beneficial depending on the situation. So depending on the amount that you put on the spend on the improvements, right? You could go from having a tax bill in that first year that has, if the property is like 100, 200, 300 units, you could have a tax bill of $100,000 with Section 179, it could literally wipe that all away, and it could really clear up cash flow, right? So, I mean, it's beneficial, but I will say this also: it's not for everyone. It depends on your situation. You might want to spread that depreciation out depending on your circumstances.
But I think even with the spreading of the depreciation, the typical timeline originally before this, with the spreading of depreciation was 27 and a half years.
Yes, yeah.
So even within that, I think they break it out. I think you got 5, 7.5, and like maybe 13 and a half.
Yes.
I'm getting it right.
Yeah.
So you still get, even if you spread it out, you still get a shorter time frame to spread it out.
Correct.
So that's also another component part too. Even if you stick with the original plan,
Right.
I think it at least shaves off about 10 years of spreading it out.
Yes.
And allows you to categorize it in a certain way. So there's still, even if you do nothing, there's still a net benefit.
Yes. Yes.
Which is another important thing to kind of highlight.
Yeah.
Great. So I would encourage folks to just zero in on that bonus depreciation aspect. Definitely figure out whether it fits for you or not, but definitely reassess your portfolio and look at all the advantages that could possibly be there for you. The next, I would say, like, what would you view or advise on the planning opportunities for the higher SALT cap and PTET election for higher tax investors?
Sure. So, I mean, I'm going to give you all the history behind it. There was a time where most Americans itemize. Like, that's really gone down with the SALT cap initially, which went to $10,000.
Right.
Raising the SALT cap to $40,000 in the pass-through entity tax, which is, let me describe what that is. The pass-through, they call it the PTET. The pass-through entity tax, what it does is it allows you, if you have a partnership or S-corp, it allows you to deduct state taxes on the federal level, okay, which is beneficial. The SALT tax is big from a business perspective because instead of, being capped off at 10, you now get up to 40.
Yeah.
Okay, that's a big difference.
It's a big difference.
And yes, that's a big difference. And I think it's a beautiful thing. I think it's something that to be honest with you, I think it's probably one of the best aspects of the bill.
I agree.
Is that? I mean, I think that's a really great thing.
Yeah, I mean, it also probably just keeps people from kind of running around to tax.
Yes.
Keep people from running down to Florida all the time.
Yes.
And then, folks who are in California, New York, New Jersey, they have a little bit more of a breathing room to take advantage of that, which is good because I do feel like, the scale needs to be balanced a little bit. I think it's just one-sided just because you chose to live in a certain state for whatever reason. Now you're penalized unfairly and all these other aspects. So
absolutely.
Glad they brought that in. So I guess from a timing perspective, right? So I think the one thing that people probably overlooked is that, they think some of these things are enacted in law and it's there forever. But a lot of this stuff is really only around for like 3 years, 3.5.
Yeah.
And so you got to act now.
Yes.
Right. If you're on the sidelines and thinking like, hey, I got time, you don't have time.
Yes.
If you're thinking about buying that first property, investing in this and doing this, you got to do it now.
Yeah.
Because the reality is that people are going to act now, people are going to do things now, and that gap, it's going to get wide.
Yeah.
And when some of these stuff in these bills expires, there's going to be a clear difference between winners and losers. And this is also why we want to bring this information to folks, is that we want everyone to be winners. Right. We're all reading off the same playbook. It's right there. There's no reason why you can't act and jump in. So from the act now standpoint, like, how would you approach or tell folks to, hey, you got to get in this now? Yeah,
I think, we're in a political climate, and with different administrations, different policies happen. I'm a big fan of striking while the iron is hot, right? A new administration might come in and change all of this.
Exactly.
So I think that some of the stuff in the bill is advantageous for investors and business owners, and I think that you should strike while the iron's hot for certain assets. Yeah,
I agree, and I think also, although we're talking about real estate, there's also a component of real assets. It doesn't have to be, the multifamily. There's machinery, there's infrastructure plays.
Sure.
There's so many different levels to it. So think about it from that lens as well too, and definitely figure out what lane works best for you.
Yeah.
And take advantage of this, and really allow it to, help, what you're doing internally for yourself, your family, next generation. Because like you said, we are in a political environment. Administrations change. And I think like anything you prepare for, you have to understand how this administration is going to impact you positively and negatively, and benefit from it the best way you can. Because there's folks who have benefited from the Reagan administration, the Bush administration, the Clinton administration, the Obama administration, and have been able to do really well because they understood the strategies. And if you take it to sports, right, you don't have to be the number one person on a team. You have to be strategic and make sure you're always in the game for a long period of time to make sure you optimize your chances of winning.
Absolutely, Brian.
And so as we're kind of winding down here and wrapping up, I guess what would the one piece of advice as people are thinking about how this bill, how this time, how this moment could really impact them? What's the piece of advice that you would give them from your view?
Yeah, I would say, try to take advantage of it. If you see certain deals in the market and, the numbers play and you're able to leverage the tax code, I would say go for it. That's what I would say. I would say act on it. The time, well, depending on how things play out, the time could be now for you. So definitely act on these things and contact a tax, accounting, CPA professional.
Exactly. And definitely, the best in the game, literally.
Thank you, brother.
Your depth of clients that you have, right? People don't realize is that we're always learning. So the depth of clients that you have that are going through various situations, you've seen a lot of it. And you can advise a lot of people because you have the breadth and the depth around the strategies. So definitely, as Andrew said, tap in. We all have resources around us. We're trying to bring resources to you. Ask the questions, and even if I presume, right, you're willing to give advice and advise, right?
Sure.
If someone already has a CPA or something like that, sure, you can presume you could do some advisory, ask a couple quick questions. Ultimately, we just want to make sure people are on the right path, and we're all kind of swimming upstream, and we keep the good vibes going and lean into the Martha's Vineyard themes of collaboration, wealth structure is what I like to say. I know a lot of people say generational wealth, but I like to put the structural standpoint in it because without the structure you can't get the generations. To get the wealth is time.
Yes.
Wealth is not really all the money, it's the time, and I think the time is now. So Andrew, happy for you and where your firm is going, and thank you for your advice that you're lending here to the folks on Why Wednesdays, and looking forward to seeing how this all plays out, and any more advice you can give us later on in the future. I'd love to have you back. So
awesome. Thank you so much, Brian. Appreciate it, sir.
Yep.